The next question is E16.2. Assume the same information in E16.1, except that Angela AG converts its convertible bonds on January 1st, 2023. So the instructions: A. Compute the carrying value of the bond payable on January 1st, 2023. So this is the conversion before the maturity. When it happens, we need to calculate first how much is the carrying value. Okay, so the carrying value of the bond on January 1st, 2023, because we don't do the amortization table, we can just do it manually by using the original amount, okay, the first present value of liability component, and then we plus the amortization, the discount amortization, okay. So the discount amortization comes from the 8% or the yield to maturity times the first carrying amount, okay, and then minus the interest paid, so 6% of 2 million. Therefore, the carrying value on January 1st, 2023 is 1,928,669.41. So B. Prepare the journal entry to record the conversion on January 1st, 2023. The journal entry should be debit share premium conversion equity 103,083.88. This is the equity component, yeah. And then debit bonds payable, the carrying value on January 1st, 2023. And then credit share capital ordinary 500,000. This is from the previous question, okay. So 2,000 bonds, okay, times 250 ordinary shares that will be converted, and then times €1 par value. So that's why the share capital ordinary is 500,000. And then credit share premium ordinary, it is the difference between the debit and credit. And then C. Assume that the bonds were repurchased on January 1st, 2023 for €1,940,000 cash instead of being converted. The net present value of the liability component of the convertible bonds on January 1st, 2023 is 1.9 million. Prepare the journal entry to record the repurchase on January 1st, 2023. So this is the repurchase before the maturity. When it happens, we need first of all to determine whether there's a gain or loss on the repurchase itself. And then we need to recalculate again the fair value of the equity component. So we calculate first the gain on repurchase, which is the difference between the fair value of the liability component and the carrying value. So if the fair value is less than the carrying value, it means that it is a gain on repurchase, which amounted to 28,669.41. Yeah, and then we will calculate the fair value of the equity component using the fair value of the convertible debt altogether on January 1st, 2023 minus the fair value of the liability component at January 1st, 2023. So the equity component is 40,000. And then we will do the journal entry. We eliminate the bonds payable on the carrying value. Okay, and then we will debit the share premium conversion equity 40,000 that we calculated just now. And then we will credit gain on repurchase because gain is on credit. And then we will credit cash 1,940,000.